Hello, how are you? Welcome you all. I am Dr. Labib from Dr. Labib Academy. Okay, today we are going to discuss about ACCA SBR. Okay, SBR. We are going to discuss about foreign currency in individual and financial transaction. This is in series of 14th. Okay, this is in series of 14th sequence. Fine. I kindly request you all to subscribe to my channel, share my channel, and watch till the end. Okay, it makes sense that if you cover the things, hopefully in this process I will try to make sure that I will give the clarity as much as possible for you all. Okay, so I kindly request you to subscribe to my channel, share this channel, and watch till the end. Okay, this is in terms of 14. This is very important. 14. Please subscribe. Okay, that's is right. Please subscribe to this channel. That's very important. Okay, thank you so much. Coming back to this, this is related to foreign currency. Okay, foreign currency. When we talk about foreign currency, there is one standard which is going to cover foreign currency with respect to accounting standards. It is IAS 21. Now what we are doing this, when you see it happens because nowadays we are talking in terms of multinational corporations are there. There is a cross-border business activities are there, cross countries are there. We are talking about different currencies. Okay, different currencies. Every country will have their own currency, but they will be usually what will happen. There will be a understanding that on in which currency the transactions will be denominated. Okay, more or less, if you take globally, dollar is one currency which is going to be the basis. Okay, whichever currency which is going to be accepted by both the parties, that currency is called as a functional currency. Is it right? Functional currency. I'm giving you a brief overview about how the things will work. Okay, please subscribe to my channel, share this channel, and watch till the end. That's very important. Okay, any comments you can post it on my in the comment section. Okay, we will cover this. What we are going to cover in this is outline and apply translation. This is a translation of foreign currency amounts and the transactions in the function. When you are talking when we are talking in terms of exposure, the exposure consists of three things. One is what? One is economic exposure. Is it right? One is economic exposure, one is translation exposure. Is it? One is translation exposure, the third one is transaction exposure. See, we will cover this into the things. Okay. Now what happens in most of the cases, we are covering two things. One is related to the translation and one is related to the transactions. Okay. Now we see, if you take the multinational, you take any company as such, is it? You take the Pepsi, you take Toyota, you take Mercedes, you take Benz, you take what they do, they will have, you take banks, Standard Chartered Bank, you take HSBC, you take American Express, is it? You take Barclays Bank. What happens when we are doing the things as per the individual country? Is it right? As per the individual country, every country will work in their own currencies, right? In their own currency. But when we are having a transactions, or when we are having the transaction either with the outside parties or internally, there should be within other countries, there should be a common understanding that which currency is going to be a currency which will speak. Is it right? As simple as that. It speaks the language of the business. Is it? It speaks the language of the currency. we will cover this, is it right? In terms of functional currency and there are two things are there. One is we are talking in terms of functional currency. One we are talking in terms of presentation currency. Yeah, when we are talking about now we will cover this in this case. What we are doing, we are talking in terms of functional currency. IAS 21. Very, very important is that IAS 21 affect the changes in the foreign exchange rates. What is the functional currency and what is the presentation currency? And in the end, we will conclude with the accounting for individual transactions in the foreign currency. Fine, individual. This content as also we have done. If you people who have covered, people who have passed financial reporting, and in my previous videos, in my videos related to financial reporting, and please go through the things which are having basics, okay? In financial reporting, I have posted my videos there, okay? Now, what is the SBR will test more complicated scenarios. Definitely, it is a professional level module, okay? They will have some complications. See, it's not tough. If it is tough, I will tell you in the beginning, okay? What IAS 21 says? IAS 21 deals with very, very specifically the what is the definition of functional currency and presentation currencies, accounting for individual transactions in a foreign currency, and most importantly, translating the financial statements of a foreign operations. See, I will give you take the things of KFC. Is that KFC operates in different countries all over the world, but ultimately at the year end, okay, ultimately at year end, they have to make a consolidation, okay, consolidation of the financial statement. When they wish to make a consolidation of financial statement, definitely they will say that how it has to be presented. Fine. Translation the financial statements of the foreign operation and translating the financial statements of foreign operations is covered in this. Means we are not only working out with the how it has to be converted and how it has to be reflected. That's very important. Now coming back to this, basically I am little bit slow here, okay? Please subscribe to my channel and see till the end. Then only it makes sense, and go by sequence, okay? This is 14th in sequence, okay? This is 14th in sequence. I'm following chapter by chapter. I'm following Kaplan, okay? I'm following Kaplan chapter by chapter. Functional currency is the currency of a primary economic environment where the entity will of. See, we cannot have different currencies. We have to arrive, is it right? We have to arrive at some currency which is going to be accepted by all. Is it? That is the reason. That is one of the reasons. Is it right? If you say European countries, euro, is it right? What they say if you take euro is a functional currency. Is it? If you take European Union, euro is the functional currency. Fine. If you take globally, is it? If you take globally, dollar is a functional currency, more or less. Is it? See, that is the reason. That is the reason. There is a always it is dominated that how the things will work in a business environment. Now we call it as a functional currency is the primary economic environment. Now what it says, how the things will work. Again, make it a part. See, once you are listening to this video, make it sure that you will have complete clarity. That much assurance I can give. Okay, definitely there will be some doubts. There is no doubt on that, but I will try my best to give the complete clarity on this. Say that entities should consider the primary factors. What are the conditions? Okay, what are the conditions with respect to function? The currency that mainly influence, what they say, it should influence sales prices of goods and services. Means different, you have different transactions done in different currencies, but you have to give importance. Okay, you have to see, make it a point, you have to give importance. If you have a doubt, first make sure where, in which currency sales is taking place. Is it right? In which currency sales is doing done. Means definitely revenue is the one of the important source of the functioning of a firm. Is that in terms of influence in sales price and services. Services mean income. See, revenue we can say in terms of income. Is that we can say in terms of sale. The currency of the country whose competitive forces it is not there. Regulations mainly determine the sale price of goods and services. They are very much focusing on what they are very much stressing, giving importance to what, sale price of goods and services. In which competitive forces means, if you are talking in terms of banks, okay, in terms of banks, definitely we'll see that which country is going in the country, how the individual firm will work, and how the competitors are working. Is it right? See, we have to match step by step with the competitors. We have to always be clear what competitors are doing, and according to that we should keep pace with the business policies. The currency that mainly influence, is that in the last one, the currency influence the labor, materials, and other cost of providing goods and services. Fine. Means this is one of the criteria. These are what we say, these are the primary factors. Okay, these are the primary factors. These are the things which you have to work it out. If primary factors are not working, okay, if primary factors are inconclusive, then the following secondary factors have to be given. Means you have to give consider what it says. The currency in which funds from financing activities are generated. Is it right? In terms of financing means in terms of equity and debt. Okay. And the currency in which which receipts from operating activities are retained. Is that in terms of what? In terms of operating activities are basically current assets and current liabilities. Is it right? How it is going to be? It means first and foremost you think about the sales. Then if it is not there, then you have to think in which currency financing is done, in which currency operating activities are. There are times when foreign subsidiary, rather than applying the above rules, simply use the same functional currency as a parent. Fine. It's the option, is it right? It is the option available. Okay. That yes, option available for a subsidiary. Is it right? It is option available for a subsidiary. My parent company is using pounds, I will use pounds. If my parent company is using euros, I will use euros. If they are using dinars, I will use dinars. Okay. If they are using Australian dollar, I will use the Australian. That means it takes into consideration as we have the option to follow the functional currency by default. IAS 21 says following factors should be considered. Whether the following operations operates as an extension of the parent rather than a significant account. Means you should know it is extension. Is that most of the what will happen? See the things when we are talking anything. Is that if you take the Pepsi, is it what happened? Pepsi has a different concept of its operations. Is that you have the KFC, you have the automobile dealers. Is it right? So everyone have, whether we should make sure that is it an extension, it is a subsidiary, it is a franchise, or it is a dealership, Is that you should make it sure that how it will happen. Sometimes what will happen, banks are the extensions, okay? Banks have the foreign operations. Is that when we have talking foreign operations, this is the extension of the parent. The level of transaction with the parent in terms of percentage terms also. If the percentage terms is contribution, is right? If the contribution of a subsidiary, if a contribution of a foreign operations is more influential, then we have to think over it. Whether cash flows are readily available for remittances to its parent. Whether we are remitting, sometimes what will happen, in some countries there are restrictions that you should not remit the cash flows. If there is no restriction, definitely this what will happen in this case, it is frequency is very high, is it right? Frequency is very high when you are talking in terms of cash flows are readily available or are readily available for remittances. If the frequency is very high, then again we have to look into whether the foreign operations have sufficient cash flows to service its debts without needing the fund. Means what happens, this is what it says. You have the foreign operation, in the foreign countries, okay? In the foreign countries, what will happen? They will deal with their own currency, isn't it? Assume you have a dollar and you have a dinar, okay? You have a dinar. You are operating in Qatar, okay? You are operating in Qatar. When, okay? Or you can put, yeah, fine. Now what happens? You if it is in dinar, you are raising the funds locally and you are servicing the funds locally. What will happen? Definitely you don't need the assistance of dollar, okay? If that is the case, definitely you have to make a judgment, is it? You have to make a judgment that which one is going to be functional currency. The presentation currency is defined as the currency in which the entity presents the financial statements. Is that this can be different, okay? This can be different from presentation currency is nothing but how financial statements are presented. Is that in most of the cases now it is a common trend. If you see, if you have an online access, if you are an investor and have an online access, then they will ask in which currency you want, is that in which currency you want the reports. Then we can have option whether you want in dollars, you want in euros, you want in pounds, is it right? You want in Canadian dollars, is it? You want in Swiss francs, is it? They will make it a point that in which currency you need. But ultimately, when you are talking in terms of consolidation of financial statements, the currency in which, is that the currency in which financial statements are prepared is otherwise called as a presentation currency. Is that as per IAS 31? Fine, miss, these are the basic things that has to be very clear whenever you work out the things. Now they have given, see, this test your understanding is very important. At least that is what I believe, okay? And it is by my experience I am saying this. Clive has an entity located in a country whose currency is in dollars. All the equity shares are owned by the entity whose functional currency, equity shares in euro, whereas the whose currency is in dollars, okay? Clive have very few transactions with parent and acts as a, means they are acting as a independent, okay? They are acting as a independent. Now 70% of Clive's sales are denominated in dollars. When we say it is 70%, this is one of the criteria to say that the functional currency is in dollars. Functional currency is in dollars, and 30% are denominated in sterling. CAI does not convert receipts from customers in other currencies. Fine, they will retain it. Means they will service their operations within the country. CAI buy most of the inventories and pay for a large amount of operating cost in such. It is contradictory, is that? Means cost is revenue is in dollars, cost is in sterlings. Okay, cost is in sterling. Now CAI has 2 bank loans outstanding. It has no intra-group loan. Both the loans servicing of the finance, is it right? See the thing. You once where we have to make sure that you have to write in detail, point by point. Okay, how which one is going to on what basis we are going to conclude that whether it is which currency is a functional currency. Is it right? Now, what it has very few operations. Is it right? It has very few operations with parent. Okay, few operations with parent, and most importantly, is that a few operations with parent. And functional currency is not the same as parent. Is that the currency of the currency of parent you have to write? Is it? I'm giving you hints. You have to elaborate on this. Currency of the parent is CAI is the entity located in the country whose currency in dollars, and CAI have very few transactions. Is it? All the equity shares are owned by the entity whose functional currency is in euro. Okay. Now, what it says that it says that we cannot say it's a parent. Okay, currency of the third one. Okay, when we say it is say 1 minute, we have to complete this. Okay, we cannot say currency is the currency of the country which has been located. Okay, currency of the country which has been located. Is currency of the country where it is located. Where it is located is in terms of what? In terms of dollars. Now, what it says, it suggests that very few transactions with the parent and acts as a independently. Is that CAI acts as an independent. Okay, independent. Fine. Now, 70% of the sales, point number 4, okay, 70% of the sales is in dollars, okay, 30% is in sterlings, okay. Fine. Next, this is one. It means based on this, we can say that based on this conclusion, we can say that it is a functional currency. That is what we say, primary factors and secondary factors. Okay, primary factors and secondary. Next one. Is it primary factors and secondary? What it says? It says that CAI does not convert receipts from customers into other currency. CAI buy most of the inventories and pay large amount of operating costs. Means in terms of expenses, is it right? In terms of expenses, they have not mentioned what is the percentage. They have mentioned large amount. Is it a large proportion? Is that expenses is in pounds? Okay. Next, expenses. See what it says. Make it a point. I am going back very clearly. Okay. It says that the currency. What are the primary factors? The currency mainly influence the sales price, competitive forces, sales and primary is sales. Okay. The fourth point is the labor, materials and other costs. Whereas secondary factors are what? The secondary factors are financing and operating activities retained. Is it what happened if there is any operating activities? Is it right? CAI buy most of the inventories and pay in proportion of operating cost. Fine. CAI does not convert the receipts from customers into other currency. CAI is an entity located in the country. See the thing. CAI is the country which is located in the country where dollars is there. Is it? If we are working with dollars, is it right? And CAI is working with dollars, and they are retaining. Is it right? They are retaining the most of its CAI does not convert receipts from customers into other. Means what happened? The conversion is not CAI conversion is not that much active. Okay, conversion is they are talking in terms of what they are converting in dollars only. Again, when you are doing this, it is one of the reasons of functional currency. Now, what it says, CAI had 2 bank loans outstanding. Both are dominated. This is, see, when we say they have the loans, and these loans have been dominated in dollars. Is it? See, what we have to make it clear, we have to make it a point that the currency in which it is located is in dollars. Okay, and 70% of the sales, this is the primary factor. 70% is the dollar. Okay, secondary factor is loans are denominated in the dollars. Whenever there is a conversion, what will happen? Does not convert receipts from the customers into other currency. Means they are retaining the same currency. Okay, if we take this into consideration, based, is it right? Based on the above, okay, based on the above, we can say based on the above factors, it can be considered that dollar is a functional currency. Dollar is a function. It means you should make sure how, in what aspect it is a functional currency, or it's not. Which currency is a functional currency? Okay, which currency is a functional currency? This is the only specific way. Okay. Now, when the entity enters into a transaction denominated in the currency other than functional currency, that transaction means we translate it. Okay, means if you are having functional, assume functional currency is how much? Functional currency is in dollars. Okay, functional currency is in dollar. Now what happens? You are trading in euros. Okay, you are trading in Saudi riyals. Okay, you are Saudi riyals. Either you are trading in the other currencies. Either you are trading in Canadian dollars. Okay, likewise, then you have to make a conversion. You have to translate into, means whenever we are making a transaction, it has to be converted into functional currency. As simple as that. See the thing. Now you are traveling. Okay, you are traveling from one place to another place. You have assume you have euros. But what you will do? You convert it into dollars, because dollars can be accepted in any part of the world. Is it? Dollars can be converted in any part of the world. In most of the cases, dollar is the most accepted currency when we take. Say you are in Europe. You are traveling to Canada. Is it? You are traveling to Canada. What you will do? You will first fix that it is better to have euro to Canadian dollar. But otherwise, what will do? You will say that you in order to be very safe, you will say that I will take dollars. When I take dollars, it can be exchanged in any part of the world. The exchange rate usually initially recorded should be what? there is a spot exchange rate. Means very simple. What is the current rate? Because the rate exchange rate will change. You have electronic kiosk in most of the banks. Most of the if you go to on the airport, we come across exchange houses will be there. Okay, they will have the electronic kiosk. That will the rate of the currency will change. Apart from that, is it right? Apart the spot rate on the date of transaction. Here also you will have the opening rate and you have the closing rate. The average rate over a period, providing the exchange rate has not been fluctuated. See, an average rate over a period of time, providing the exchange rate has not fluctuated, means you have the option to take the average rate. Means it leads to what? It leads to, we are talking about how it will work. Okay, cash set. When cash settlement occurs, when cash is received from an overseas customer, the settlement amount should be translated into functional currency. Which rate we will use? See, this is very simple, a common sense question. Okay, common sense point as such. Whenever we are making the transactions, we will work out what is the current rate on is it using the spot exchange rate on the settlement. If this amount differs, that is used for a transaction occur, definitely. In some cases, if there is a difference, then there will be then we call it as a exchange difference. I will tell you, exchange difference, you will have profits, you will have losses. Is it right? When the currency becoming stronger, when the currency is becoming weaker, it will have all repercussions. Okay. Now, what is the exchange difference settlement? See that they gave you a small illustration. Okay, IAS 21 requires that exchange gains or losses on settlement is to be recognized in profit and loss account in the period in which they arise. Is that if there is any profits, if there is any losses, it has to be done on the same period. Is it right? IAS is not definiting. Is it means this is very specific point where the profit or loss on such gains or losses are classified. It would be reasonable to record them as a operating expense or income. Is that it means that's what it says. Means what happens whenever we are doing a foreign exchange transactions, is right? Forex transaction. Whenever you are doing a foreign exchange transaction, what happens? It is for the current at that spot. Okay, we are opening the deal, we are closing the deal at one spot. That's all. We are not going to go beyond, because what will happen? The value of rate of exchange, the currency exchange rate will fluctuate. Is that will fluctuate? Even a 0.001%, is that 0.001% will make a lot of difference. Okay. On May 7th, very small example, very specific. On May 7th, the functional currency of dollars sold to a German entity is how much? 40,000. On this, the rate of exchanges of the means if you give $1, you will get 3.2 euros. Okay, you will get 3. The sale is translated into a functional currency using the exchange rate. How much you will get if you are giving $48,000 euros at the rate of $1 equal to 3.2? How many dollars you are getting? You are getting $1,500. Okay, $15,000. What will happen? See the thing as the general entry. Is it right? What you say sold goods. Is it right? Sold goods to an entity. We assume it is going to be credit sales. Okay, debit will be receivables. See, is it credit will be revenue. Assume it happens when it happens on 7th of May 2006. Okay, now on 20th July, is it right? On 20th July, after almost 1.5 months, June, July, 2.5 months, the customer pay the balance. See, now what happened? The exchange rate is going to be how much? See, it is what it was how much? It was 3.2. Is it right? It was 3.1 dollar equal to how much? 3.2. Now what happened? $1 will become how much? 3.17. Is it? 3.17. Now when you are saying it's a 17, what happening? The settlement of the functional currency will be taken place with respect to what? With respect to the spot rate. This is going to be the rate at which it is going to be, settlement is going to be done. Now what happens? See, we have sold it for how much? We have sold it for 48,000. Okay. This will be the base for our calculation. But we are settling it at what rate? We are settling it at 3.17. Now, if you take that into consideration, what's happening? The dollar is, number of dollars are increasing because the dollar is becoming stronger. Is that you are paying? You are, is that you are fine? Now it says that how much you are receiving cash. You are receiving cash of 15,142. Is that? You are receiving cash of 15,142. Receivables are how much? Here we have debited receivables. Receivables will be the same. Is that 15,000? How much is there in this process? There is a, means you are receiving higher amount of dollars compared to 7th May. Compared to 7th May on the settlement day. The difference between the amount which has been agreed on 7th May and the amount which has been received on 20th July is the gain in terms of what? Gain in terms of dollar. Is that? And this has to be settled in the year it has been occurred. Okay, it has been occurred. This is the simplest way, is it? This is the individual transaction. Now, what is the second part? We will do this at a later stage, okay? The treatment of any overseas companies remaining the statement of financial. When we talk about statement of financial position, there are two things will be there. One, we are talking about the monetary items. The second, we are talking about non-monetary items. What are the non-monetary? We don't want to take units of currencies held in the assets and liabilities. Is that what are the monetary items? You have the cash, you have the receivables, payables, and loans. Okay. Okay. And it has to be retranslated. Is that? These are, because see, as simple as that. These are the things which always, it's a monetary items. Cash or near to cash. Okay. Cash or near to cash. They are talking about very clearly cash, receivables, payables, and loans. It has to be retranslated. Whereas non-monetary items are what? See the thing. Non-monetary items are non-current assets, inventory, and long-term investments. Is that? Do not retranslate. If the item is carried at the fair value, the fair value should be translated at the date it was determined. If it is anything in the fair value, fine. Whatever the procedure we have to take in terms of non-current assets, we have to follow as per the requirements. Fine. Now, the most important thing that revolves around is it is the monetary items compared to non-monetary items. Okay. That's what it says. Sales is related to monetary items. Okay. That is the reason how we are concerned about that. And as an exchange difference settlement, IF requires the exchange difference on retranslation of monetary items and liabilities should be recognized in profit and loss account. Is it? If they will have such as exchange gains or you will have losses, should be classified. In the previous case, how much is there? See, in the previous case, it was 3.2. It is 3.17, and if you take into consideration, it is 3.4. Is that? It is 3.4. See that on May 7, functional currency is how much? It is at the rate of 48.3.2. Now, when you are receiving it, how much you have to see? It is a historical cost. Is it right? invoice, whatever there on the invoice, it has to be done, it has to be shown in the invoice, and whatever we are going to receive at the date of settlement, we have to take that rate that exists on that date of settlement. By reporting date, what will happen? The invoice has not been settled on this date. The rate of exchange is how much? 3.4. Is that the rate of exchange? $1 will becomes how many? 3.4 euros. Okay. Now in this process, what will happen? Receivables are monetary items. Is that receive must be retranslated into functional currency. Is that retranslated into functional currency? When it is retranslated into functional currency, what will happen? You have to retranslate, because it has not been settled, whatever that closing rate, on the closing date, whatever the rate, it has to be done. Now what happens when it is retranslated? How many dollars we will get? We will get less number of dollars. Is that we get less number of dollars, because dollar currency is becoming weaker. Is that? Now less number of dollars. What we have to do? Whatever the difference is there, that difference has been treated as an exchange loss, and automatically what will happen? Your receivables will decrease. The receivables will decrease. Okay. See, this is where we are talking in terms of, means the message. What we are doing is, there will be a date, on the date of transaction, that we have to take the date, and we have to take the date on the date of settlement. And in this process, if there is any profit and loss account, we have to treat it accordingly during the current period only. And this happens to whom? This happens with respect to what? This happens with respect to monetary item exclusively. With respect to non-monetary items, okay, Olympic has a functional and presentation currency of the dollar. Using the cost model of IAS, property, plant and equipment, they have purchased a plot of land of another country in 1.2 million dinars. Is it relevant exchange rate? They have given the exchange rate dinars to dollar. Okay, dinars to dollar. Now what is the functional currency, which has a functional and presentation currency of the dollar? What is both functional and presentation currency is the same. The land is initially recognized at cost. This should be translated into functional currency, exchanging the rate. How much you have to translate it into dollars, because it is both are same. Okay, 1.2 divided by how much? 1.2 divided by 4 million is a 1.2 million dinars. Okay, it comes to how many dollars? $300,000. Land is not a monetary item. Because land is not a monetary item, it should therefore not retranslated. Is it? Now, according to no depreciation, definitely on land we cannot charge depreciation. This means that the land value will remain how much? The land value will remain 3. This is going to be used in subsequent at a later stage, whenever we are converting the current, whenever we are translating the financial statements into a functional currency. In that case, we have to be very clear: non-monetary items and monetary items. Non-monetary items should not be retranslated, including inventory. Non-monetary item at the fair value. Pallet which has functional currency, and there is a functional currency and presentation currency is dollar. They are using the revaluation model, IAS. Here what they are saying, in the previous case they are using the cost model. Okay, see here they are using the revaluation model. That's where we have to be little bit careful in these areas. Okay, now On 1st July, Pilot purchased a plot of land for 1.2 million. The fair value is how much? $1.5 million. The land is initially recognized at cost. And what is the cost in terms of dollars? In terms of dollars is $300. Okay? In terms of dollars is $300. Now, land is not a monetary item, so it is not retranslated. Fine. However, in accordance to the revaluation model, is that in accordance to the means if it is, they have said very clearly, if it is where it is there, I will just go back to that. Okay, I will go back to that and I will give the things. Is that exchange difference on retranslation of monetary items is here. Next one, somewhere it has been given. If the item is carried at fair value, the fair value should be translated on the date it was determined. Is it right? On the date it was determined. This is the rule which is applied here. Okay, this is the rule which is applied here. That's so that you will have very clear here. Sorry, is right? It is applied here. Is it right? It is applied here. Is it? It means if it is determined on the particular date, is it right? On the particular fair value. What happens on the particular date? If the fair value has been determined, this valuation is denied, so must be translated into functional currency. Is that if it is as per the fair value, then definitely we have to 1.5 dinars. 5 million dinars divided by 3. What we are taking? We are taking what is the closing value. Okay, what is the closing value? What happens? Definitely the value of the land is increased by how much? $200,000. Now, what is the treatment we have to give? It should be reported as a revaluation gain in OCI. Is it? It should not be treated in the profit and loss account. It has to be treated in a revaluation gain in OCI, and it should be identified as a revaluation reserve with other See, this is what with other components of equity in SFM, statement of financial position. Is that? This is where it says if it is done on the cost, we have to take the things as it is. If you have done on the fair value, if there is any profit or loss on the date of determination, then we have to take that profit, gain or loss, we have to treat it in a OCI, and we have to treat it as other components of equity in the statement of financial state position. Okay, now test your understanding, but there are three different situations. Okay, there are three different. An entity, Butler, has a reporting date of how much? It is 31st December and functional currency is dollar. They are given what is the functional currency. On 21st November, Butler PLC buy goods with respect to how much? They have done with Swedish suppliers, Swedish krona. Okay. On 19th December, Butler pays Swedish supplier in full. How much is there? See, exchange rate. What is the functional currency? Functional currency is in dollar. They have paid 11.15 and 10. Show how the above transactions is accounted in the financial statements of Butler. Is it right? See what happens. There are two things are there. Butler buy goods. One is related to purchases. Okay. One is related to purchases and one is related to settlement. Okay, there are two things are there. One is related to purchases, one is related to settlement. Is right? Now, at the time of, see what we have to do at the time of purchases. How much they are saying? They made say 324. Is it right? Is that? How much is there? 324. 324. Is it at 324? What is the what is the see, this is divided by how much you want to know what is the dollars, is it right? 11.15, is it right? 11.15. It comes to how much? It comes to almost 29,058. Okay, this much are the dollars. Okay, now what we have to write? We have to write a general entry for this. Okay, we have to write a general entry. What is the general entry? Usually purchases will be done on credit basis only. Okay, because they are making a payment at a later date. It is assumed that it is a credit purchases. When you are talking in terms of credit purchases, it will be nothing but payables. Okay, liability. Fine. What will happen? Debit will be purchases. How much? $29058. Credit will be what? Credit will be payables. How much? 29058. Fine. Next. Okay. Next. What is the second one? Second one talks about what? Second one talks about the, is it? It talks about the settlement. Is it right? Settlement. At the time of settlement, same thing. How much we have to make settlement? 324. Okay, 324. What is the exchange rate as on that date? As on that date is exchange rate is how much? 10.93. Okay, 10.93. How many dollars you will have? You will get 29,643. Okay, 29,643. See, if you are paying on the date of purchases, how much is that? 29. Now what will happen? Dollar is it? Now what will happen? You have to pay more dollars. Is it right? You have to pay more dollars. Now what we additional? You have to take the difference. Is it right? How much is the difference? How much is the difference? Difference is 29643 minus 29058. Okay. 29058. It comes to how much? It comes to 585. You are paying more. Is it right? You are paying more. It means it is a loss. Okay. What happens? You are settling down the, what is the general entry you have to write? Is that general entry you have to write what? You have to, debit is what? Debit will be payables. Is it right? Debit will be how much? Payable will be payables will remain same, 29058. Okay, 290. Now credit will be what? Credit will be cash. Is it right? Credit will be cash. How much you are paying? 29,643. It is in dollars. Okay. Now difference. What is the difference? Difference is that loss. Okay. Difference is the loss. We have to profit and loss. Okay. Profit. How much is the 585? An exchange in loss is a, it has to be recorded in profit and loss account in the same year. Okay, in the same year. This is not difficult. It have to be little. We have to be very, very specific when you are doing this. Okay. Now, an entity waiter has reporting date of 31st December. Is it right? 31st December, and the dollar is a functional currency. Okay. Waiter borrows in foreign currency, CRAM. The loan is how much? 120, and was taken on 1st January. A repayment of 40,000 was made in 2007. Okay, first March. They gave you first March. What they say? How the above should be accounted in the financial statements of waiter for the year ended. Okay. What is the transaction amount? Okay. This is the solution. Is it? What is the transaction amount? Okay. Transaction amount is how much? How much they have taken the loan? They have taken the loan of how much? They have taken the loan of how much? 120. Is it right? They have taken the loan of how much? 120. loan of 120 was taken up, and 1k is how much? $2. Is it right? 1k is how much? $2. Means 1 gram is how much? $2. 1 gram is $2. Is it right? 1 gram is $2. Is that 1 gram is $2? Means 120 grams will be how much? 120 grams will be question mark. Is it right? You have to multiply. It comes to how much? Times 2. Okay, times 2. $2. Okay, times $2. It comes to how many dollars? It comes to $240. $240,000. Okay, $240,000. Now, what is the general entry you have to write? Is that what is the general entry you have to write? You are getting what you are doing. You are borrowing in a foreign currency of the gram. Okay, means what you have to do? You are receiving cash, debit cash, and credit what? Liability. Which liability? It is in the form of loan. Is it? It is in the form of loan. How much? It is in dollars. Okay, 240,000. Okay. Now, they have see, loan was taken, a repayment was made. How much? They have repayment they have made. When they have made repayment? 1st March. Okay, they have made a repayment on 1st March 2007. How much they have made repayment? 40,000. Convert this 40,000 into dollars at the rate of $3. It comes to how much? 40 into 3. It comes to $120,000. Okay, it comes to $120,000. Okay. Now, $120,000. Okay. Now, what happens? You write the general entry. Okay. What is the general entry? General entry is debit will be what? Debit will be liability. You are paying off the loan. Is it right? Debit will be the liability. How much? $120,000. Credit will be what? Credit will be cash. Is it? Now, what is the balance amount of loan? Is it? Balance amount of loan. Is it right? Balance amount of loan in terms how much they have borrowed. They have borrowed how much? They borrowed 120. Is it right? They paid how much? They paid 40. The balance is how much? The balance is 80,000. Okay, the balance. Now you convert this. Convert the closing balance of loan into dollars. Is that 80,000 at the appropriate rate? How much? 3.5. Okay, at 3.5 it comes to how much? It comes to $280,000. Understanding my point? Little bit you have to be very focused when you are doing this. Okay, you have to be very focused. Now, what we have to know, what is the exchange loss on translations? Is it right? Statement showing. Just we have to 1 minute. Yes. Okay. Fine. No problem. I am seeing the space. Okay. We have to know statement showing exchange loss. Okay. Exchange loss on translation. Please subscribe to my channel. Okay, and see the things till the end, and see the things at one go. Okay, one go. Don't take your time. See how much time is there, and according to that you plan it and you just work it out. Okay. Now what happens is this is the period. Is it period in terms of K? This is the exchange rate. Is that this is the exchange rate? It is in terms of dollars. Okay. Please subscribe to my channel. Share this with others. Okay. The only purpose is we have to reach to as many people as students as possible, and everyone has to get the benefit of this. Okay, benefit of this, that's the only purpose is happening. Okay, and we have to make it, any comments, you just post in the comment section, definitely I will consider that. Okay, 1/1/2007, how much is there? 120. Okay, 120k. Okay, what rate? 2, is it right? It comes to how much? 240, is that? We have to do this, and everywhere the reconciliation is part of the process. Okay, we have to be perfect in reconciliation. Okay, we have to be perfect in reconciliation. Now, how much is there? How much they have paid? 40,000, is it right? They paid. What is the rate? Rate is 3, is it right? Rate is 3. How much you have paid? 120. Okay, 120. What is the fine? Now, what is the closing balance? Is it right? What is the closing balance? Closing balance is how much? Closing balance is 80,000. Okay, 3.2. Is it right? How much is there? 280,000. Fine. Now there is a difference. Okay, there is a difference. Is it? How much is there? Difference will be how much? See, 240 minus 120, it comes to 120. 120 difference is 120, and 280 difference is how much? Difference is 160. Is that? Difference is 160. This 160 is exchange loss. Is that? This 160 is exchange loss. For this, we understand my point. See what happens. You have taken 240 in dollars. Okay, you have paid 120. Still, you have to pay how much? You have to pay 120. Is that? Now, difference is 120. Is that? 240 minus 120. 120 will be there here. Okay, 120 will be there. 120. How you got this? I will make it a point. Okay. Is it? I will just want to make sure that, is it right? I want to make sure that, see, I will write here. Okay, 240 minus 120, is it right? Minus 280. It comes to how much? It comes to minus 160. Is it right? It comes to minus 160. Okay, this is the exchange loss it has to be treated in the profit and loss account. What is the journal entry you have to write? Journal entry is debit profit and loss account. Is it? Debit profit and loss account. How much? 160,000. Your liability is increasing because you are paying more. Is it right? Credit will be the liability. Credit will be the liability in terms of loans. How much? 160. Put the currency, very important, dollars. Okay, put the currency dollars. Fine. This is the way we have to make sure that how things will progress. Okay. Fine. Any doubt is there? Just you just mention in the comment section. I get back to you. An entity attendant has a reporting date of how much? Has a reporting date of 31st December and has dollar as a functional currency. Attendant purchased a plot of land overseas. Land is a non-monetary. Is it right? Land is a non-monetary. The entity paid for the land at currency. What is fine. The purchase cost of the land is this much. Okay. Now, the value of the land at the reporting date is 80,000. Describe how financial transaction, is that? How they have given the exchange rate on first hand should be accounted in the financial statements I've attended in the year in terms of based on cost and based on the fair value. Is that? Based on the cost and based on we have covered this. Is it right? Based on the cost as such. Now, asset has to be initially initially recognized at cost. Okay, recognized at cost. Now what happens, what is the value of the, how much they have purchased? They have purchased, the purchase cost is how much? The purchase cost is 60,000 R. Okay, Rylands. Okay, Rylands. Okay, fine. And what is the 60,000 divided by how much? R. Rylands is 8. It comes to how many dollars? It comes to $7,500. Is it? This has to be recognized at a initial cost. What is the initial cost? Initial cost is how much? Initial cost is 7,500. Is it? See, as per the cost, is it? No depreciation, is it? It is a monetary item. Monetary item. It is not a monetary item. It is no retranslation. Okay, no retranslation. We have to write it. Is it right? As per it held under cost model. As per the cost model, the value will remain. Okay, value will remain how much? 7,500. Fine. Now, if it is fine, it is. Now put one dash here. Okay, put one dash here. Now keep it in mind. We are talking in terms of what? We are talking in terms of fair value. Okay, we are taking in terms of what? We are taking in terms of fair value as such. If it is taken at a fair value, fine. If it is taken at a fair value, is it? Now, if it is taken at a fair value, initial cost is how much? Initial cost is 7,500. Is it right? Carrying amount, is it right? Carrying amount at the 31st December. Is it right? Carrying amount 31st December. How much is the carrying amount of 30th December? Carrying amount is how much? What is the value? Day reporting date is how much? 80,000. 80,000 divided by, sorry, it is R. Okay, it is R. Is it? It is R. Okay, divided by 10. It comes to how many dollars? It comes to $8,000. Fine, $8,000. The value of land is increased how much? Value of land increased by how much? $8,000 minus 7,500. It has been increased by how much? It has been increased by 500. Is it right? Now, is it right? Now, what has see the things? You have two things that has to be done. Is it right? If a land is held as per the IAS 16, what is the treatment? If the land is held as IAS 40, is it right? IAS 40, investment property. What is the treatment? If the land is held, is it right, as per IAS 16, is it right? Then the gain will be shown in other comprehensive income. Okay, if the land is done as per IAS 40, is it? The gain will be recorded. The gain will be reported in profit and loss account. Is that? The gain will be recorded in profit and loss account. Fine. This is the way you have to make sure that how it is going to happen. When it is done with the cost model, when we have done with the fair value model, how the things will change. Okay, this is what we have done. Okay, I will stop here, and once we come back in the next session, we will see test your understanding. Okay, and we will complete this in a very brief way. Okay, now Fine. Okay. Thank you so much. Best of luck. Please subscribe to my channel and share this channel. Watch till the end. That's very important. Okay. And you see what is the sequence is very important. Okay. The sequence. I am very particular about the sequence, and you have to follow the sequence in terms of this. Okay. Best of luck. Take care.